How's it going, everybody? Wanted to come back and give a quick update on what I'm seeing currently in the market. Let's go ahead and look at the SPY here. So we had the last time I updated, we were down here, and we knew we were at a really critical area here because that's where, at the time, the most volume had been done since this March low, and you can see that's actually now the average weighted price that's been paid since this low. So that 320 area, can continue to be important if it is visited again. Right now, what I'm looking at is obviously we went back bullish. I noted that once we kind of got back above the 339 to 340 area that we could really see some good upside. And the initial thing we needed to get over was the 330 area. And so on this gap up, we held really well, closed up here, and that was kind of the first signal that we were going back bullish. And so immediately, I put the volume weighted average price from that low because that's what you want to see. There was obviously a change in character from this low. So now we want to see, can this just continue rising and does it get bought? And as it came down and continued to be bought, we knew that as long as we were above this, we were going to stay bullish. We did have a short trade. I think we took this trade in here, and we shorted a bit up here as well. The reason this is a good target is because you can see on this gap up that we actually we made a low here, finished a high of day, but then we had this big breakdown. And so that's what I would consider a breakdown area. Basically from this gap down to where that low was made, that's going to be supply because you have these buyers here that bought on this gap up and they closed it strong, but this next day you're taking out basically the last 5 candles with that drop. So all these buyers up here really got overwhelmed with the selling pressure, and so markets like to come back and retest these breakdown areas. And so anywhere basically from that bottom, that low of that day, up to this gap, that's going to be supply and that's going to be resistance. Most likely, it's going to give some sort of reaction. And so that's what we're seeing here. Look over on the 30-minute here. This was the start of the week right here. And so pretty much the whole week since we hit this top, we've just been holding underneath this. And you can see that the 5-day moving average is now starting to curl down, so we really don't want to be long this market right now. We want to kind of let it digest these gains. I wouldn't be surprised if we did see a little further downside. That's something that's kind of just set up, and I've looked at a lot of names, especially big tech names. They look possibly ready to cool off a bit. I don't think that it should be any surprise if we see a lot of volatility coming into the election season. Right now we're in a range here, and I think best bull case is that we continue to hold this volume weighted average price from the low, and so that means maybe we come down towards 340. Personally, I wouldn't be surprised if we even came a bit lower, but that's really the first huge area of support. You have the 20 and 50-day moving averages just under 340 here. And that's right where that volume weighted average price comes in. So this is really going to be the first area, if we continue to see downside, right around 340, maybe slightly below, that I would look to probably purchase a bit, or at least look for signs that people are purchasing and wait for a better setup to get long. With a high probability trade, we want to wait for this to bounce, maybe create a higher high, get back above this moving average as it curls back up. This is one of the best intermediate term trend indicators there is, in my opinion. If it's going up, if it's rising, you don't want to be short. And, obviously I don't really like shorting the SPY regardless, unless it's for a really short-term trade, like up in here or up in here. I'm in and I'm out typically. I don't hold these for long periods of time because the daily chart's in an uptrend, and you want to play the larger trend. So to kind of sum it up, going into this week, I think we should be prepared for a little bit more downside. Um, that's just, simply just look at this 5-day moving average and the fact that we just bounced off of this supply at the highs. We shouldn't be surprised to see more downside. I'm going to cover a couple stocks that I'm looking at that we've actually played a bit and kind of go through those. But this is set up for more downside. I think 340s is going to be the first good test. If we actually look down here, the only real area of supply, and I'm just going to take this off to make it a bit cleaner, excuse me, the only real area of demand is down all the way here at 331 to 332. Why? Because we rallied and then we kind of based here at the low 330s, and then we went on to take out this high. And so, maybe at this gap here at 335 or slightly below into the 330s, that would kind of be my second price target where I would be looking to make some purchases, after some confirmation, maybe some short-term trades in this area, and then look for more confirmation. Okay. Ideally, the best buy spot that I would see, you can kind of see it on the weekly, and this is just looking really far ahead. If the market happens to, really kind of fall out of bed, we want to be looking all the way down here around 300. And so this is a hypothetical, no clue if this will happen. I'm not sure at all, but if we happen to see a bigger drop, where would I actually look to put on some long trades, some swing trades, maybe to buy some equity on names I like? It's going to be probably down in this area. Maybe I'll start looking around 310. That's where the 50 moving average is on the weekly. So I'd probably start looking around 310. You can see that's kind of where we based here before breaking out of this high. So maybe around 310, 300 on a major move. So that's kind of big picture, okay? Just want to look at a couple things. In our Discord, we killed Zoom this week. And, this is just the magic of these anchor VWAPs, guys. I threw a couple on here. First of all, this one, so you can see we made a low and volume increased here. And so what we want to do is look for high volume events like that, look for big lows or big breakouts, and put one from that point. And so you can see as we came up here, we actually started forming a symmetrical triangle, which can be a really powerful way for a breakout to happen with confluence of other stuff. So first of all, we have this volume weighted average price just holding, and that's a good sign of strength. If it's holding after a high volume event, that means that event or that day, since that point, right, these buyers, they just want the fair price. And once it comes to fair price, they're buying it, they're buying it, they're buying it. And so that's a sign of strength. And then on top of that, you have a nice technical pattern, and you finally get that breakout. And once we got that breakout, I went ahead and you see the volume, and I went ahead and put a volume weighted average price from that breakout. And as we came up here, we really started holding it. What I was looking for then was to take out this area here. I wanted to see it make a higher high. And so I hadn't purchased anything. I was just kind of watching it. I wanted to see it make a higher high. And so finally here is where it breaks out. And then this is and this is something that I bet a lot of people kind of fell for. They had a huge shakeout in the morning. And if you're looking on smaller term, you're day trading or whatever, and you got in over here, you might be like, oh shit, you're getting stopped out. But we look to purchase in here because this 5-day moving average was really picking up steam. We have that technical breakout, and we're simply pulling back. And kind of when I saw this reversal candle and we started to kind of just pull back slowly towards the bottom of it, we went ahead and purchased for a swing. And obviously you can see that that worked out really well. And so that's kind of the power of this type of trading that I do. I also still do a lot of morning scalp trades. We had a really good one on, was it deep? No, it was Chewy, sorry. We had a good one on Chewy. They had a gap up on Friday, and we went ahead and shorted this, and it's simply what we just looked at on the SPYs. It's what we just looked at. We had a gap up here. They based it, and the next day they had this huge breakdown with the high right around that basing area. So they gapped down, and then they shit the bed. And so what we want to look for on a gap up here is signs that it's actually a good sell. And so basically in the morning, we're on a 1 minute chart, and let's go over here. And so immediately it has the open here. It breaks up over the open price and then right back below. And so that's telling you that this opening price is failing. It's not going to hold. And then it actually makes a lower low. And so that's telling you that this area here, this area in here, right? We went up, tried to make a higher high, and we actually took out the low a day. That's telling you that up in this area, there's more supply. There's more sellers than buyers, and the sellers are currently stronger than the buyers. We came up here and based, could not make a higher high, and so I was shorting all in here, and I actually did not put a short back on up here. I wish I did, obviously. But these are the trades that I kind of do that aren't huge momentum trades. These are typically I'm gonna fade. I'm gonna fade a move, or maybe look for some sort of breakout sometimes. But typically I'm looking to fade a move, either buy it or sell it when it's extended like this. Lastly, I just want to look at Tesla. I know a lot of people are still kind of obsessed with Tesla, so we're gonna go ahead and look at it. Get back to a 30-minute here. So Tesla had a really good trade this week, and I want you to just look over here. Look at this 435-ish level and see that it's a really clear, what's called an inflection level. And so you have a lot of gaps over and under, and typically when it opens over, you're seeing bottom wicks, and it's going to close over it. Right here, bottom wick over it, bottom wick over it, bottom wick over it, and then you see the exact opposite on these gaps below. There's top wicks, and they're closing it back underneath. And nearly every time, it's forced to gap over or under this level because it's so difficult to get through. And so that's what we call an inflection level. And I use these a lot in my morning trades. If I see a gap down or a gap up, and this stock has fresh news, then I'm going to look at this inflection level as a place to take a trade. Anyways, Tesla also had a really nice setup going here recently. It gapped down, but then it was wedging right here. See this? It had a really nice wedge going on. And it was a falling wedge, and it was also right at this uptrend line. And so I said, okay, I want to see Tesla break out of this wedge. And I posted this on my Twitter as it was breaking out right here. If you don't follow my Twitter, go follow my Twitter. It's in the description. Posting fire setups on there almost every day. So go check me out on there. I wanted to see Tesla get back above this 5-day moving average. I wanted to see some consolidation here, this to turn back up. Look at it holding the uptrend the whole time. And then I wanted to see it get over that 435 and close above. And so that's exactly what happened. And so from that point, I wanted to put the volume weighted average price from this low, from the breakout low, and I wanted to see if I could look to purchase there. And so that's what we did. We purchased a few times. I had this in my morning watch list for like the last 3 or 4 days of the, uh, I think, I don't know, like 2 or 3 days in here. And you know, it's a great trading vehicle. When this thing finally breaks out of consolidation and gives you this buy signal, you got to look to buy every dip and try, you know, maybe try to play this breakout. Super great trading vehicle. Right now, guys, I would not be long on this thing. I wouldn't touch it long. Why? Because it broke down from the uptrend recently, and it's now below its 5-day moving average. This looks ready for some downside, perhaps. In my opinion, I'd look for it to come in, probably to fill this gap at first, at this 435 level. If we find it gapping under 435, that's probably going to be a short, in my opinion. But again, shorting stocks with this strong rising 50-day moving average is tough. Sometimes you'll get lucky, but oftentimes it can be really tough because buy the dip crowd is relentless. So, you know, you might want to short something other than Tesla, but I think it's good to know that you probably shouldn't be long on this right now until it gives us uh, a little clearer sign that it's actually going to head back up. All right. Hopefully this helped you guys, gives you some insight, and helps your trading into the next week or two. All right. I'll see you on the next one. Peace out.